Yo, what's up everyone? My name is Dom and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Alright everyone, first one I want to bring up is ATOS, ATOS Therapeutics. Now, I've talked about this one on the channel multiple times here. We brought this one up last time. It was around this $4 or $5 mark. The stock ran all the way up to $9. We were able to get rid of it at a good price up there, and now the stock has come back down to about $5.50, and we are back in once again. I'm buying the stock in this one because it's a pretty cheap stock, you know, $5, not cheap valuation wise, just cheap dollar per share, and also because the options are pretty darn expensive here. Now, there has been some more buying being accumulated here in some of these calls. If you come and check this out here, there's a whole bunch of call volume starting to come through again. And this is kind of exactly what I was seeing last time. You know, 6,000 contracts traded here, 8,000 contracts here. You know, they're going out to August, so they're you know, pretty bullish here. You know, in the longer term here. I also like that they're getting some of these short term, really far out of the money calls. And that's what I was seeing last time. People are coming in, and a lot of these July 16th 12 strike calls are trading here. This is exactly what I was seeing last time when we got in the stock around $4, and I brought it up on the channel. Now, if you look at the stock chart here, last time we brought it up, I think it was right around $4 or $5. You know, it ran up all the way almost to 10, and in that type of scenario, when I have, you know, 100% gain in a stock, you know, even 50% gain in a stock, especially something speculative like this, you know, I start to think about taking some profits here. You know, I'm not going out, you know, buying like 10% of my portfolio in this stock here. You know, it's just a small speculative position. So, you know, when I have a 50 to 100% gain, you know, just in the stock here, you know, that's a pretty nice gain, and I'm looking to take it off the table. So that's exactly what we did. You know, we were patient with it, letting it pull back, and you know, they're buying more calls now. So we jumped back in the stock. I actually jumped in this one on Friday, right at the close or so. So we do have a little bit of a nice profit here. Now this thing ran up. This is a really volatile stock, and just to show you guys here, this thing ran up to about $6.30 today. You know, it opened at about $5, ran up $1.30. That's about 20%, and then, you know, it came back down to, you know, only up about 32 cents or about 5%. So this is an extremely volatile stock. With these stocks, in my opinion, you have to know when to take profits, and you know, pigs get slaughtered, so you know, you don't want to be too greedy with this one. You know, otherwise you're just going to be riding it back down. You know, things always do pull back eventually, you know, when they're running up like that. So, you know, in my opinion, you got to be diligent and take profits. That's what we did, and now we're buying it back at a cheaper price, and that is the ideal scenario. You know, if you're just, you know, trading or, you know, in a speculative stock and you think it's, you know, ready to take profits. You know, it's all about learning when to take profits, not being a greedy pig, because pigs, as we know, get slaughtered. All right, next one I want to bring up is this is another kind of speculative play here. Now, the one reason I got into this one mostly was because it was down huge today, down 20%. Now, this used to be a SPAC here, and as you can see here, there was some all-right call volume coming in here. Now, SPCE, a stock that we've talked about on this channel before, SPCE is the ticker, Virgin Galactic. They have a test flight coming up on July 11th. So, this week or next week. I think it's early next week. Now, ASTR, Astra Space, kind of does the same thing here. They're a company that is getting into the test flight, you know, sending passengers, you know, regular people, passengers up into space. So now this could be a major catalyst for the stock. But if this stock is up big tomorrow because it was down so big today, this might just be, you know, a 1 day or a 2 day trade. Unless the stock, you know, kind of deteriorates further, you know, I'll hold it into that test flight. But once again, that test flight is not guaranteed to work out. And if the test flight does not work out, SPCE, Virgin Galactic, along with this stock, will take a beating. So this is a risky play here. I don't think there's much of a chart because this thing just merged in a SPAC. yeah, there's not much of a chart, but I think this thing ran up to about 18 after the deal was announced. Closed with the SPAC, it looks like, just a couple days ago, so it's de-SPACed. This is definitely a risky one here, so I decided to go with this out of the money call here. I've talked about on this channel multiple times with some of these risky stocks here that make huge moves to the upside or to the downside. I'm not trying to get an at the money call here because this trade either really works or it really fails. So I'd rather go with the lower probability out of the money call, outlaying significantly less premium, but if the trade works in my direction, then I would have a higher risk reward. So on these, I wouldn't go with a super out of the money call on something that is, not a speculative stock like Facebook or something. Something like this ASTR, I'm going for a low probability trade, a small outlay in premium for a big reward if the trade works out, because in my opinion, this stock is either going to deteriorate significantly further or it's going to move to the upside very rapidly, very aggressively. So I want to be in that out of the money call in case it deteriorates further significantly. I'm outlaying a very small amount of premium, but if it has that huge significant run to the upside that may occur here, I'm going to be having a greater risk reward on this trade. So I really like doing that with these speculative stocks here, risking a hell of a lot less premium, in case we do get that strong move to the upside, better risk reward in my opinion. So thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep these subscribing up. Make sure to share this video, with somebody who likes to trade. We're trying to build a community here of traders. So we'll see you in the next one.